In this video series, we're going to walk through a strategy that almost anyone could implement in order to achieve $1 million net worth in around 10 or 11 years. I previously walked through a little bit slower and lower funding level for this strategy, but this one we're funding a little bit more aggressively, and we'll also compare it to what you'd need to do in the markets and what kind of returns you'd need to have to achieve a similar net worth. Check out this video series in the video description. I'll have a playlist, or up here is a link to it. What are we doing with this policy that might not work with something like your Roth or your 401k or even your brokerage account? Well, so you can see here that we have $108,000 in cash value, and then it becomes $153,000 in accumulation value in year 4. But then we're taking a loan against this policy for $103,000 in order to make a purchase of an asset. So in this case, for $103,000, we might buy property for something like $80,000, and then put in some work to it, and $23,000 or so in work, or maybe $20,000 and some of that for closing costs. But our asset acquisition cost, $103,000 through forced appreciation, like we discussed. We then have an after repair value or after renovation value of $144,200. Make sure you watch the rest of the videos in this series, but if you really want to know the secret to success, you're gonna have to watch through this whole video. That asset's value is now $144,200. And so looking at that, we should have that on this property 1 sheet. So we can see here, this is the initial principal. The loan amount will be this. But since we used our insurance policy to purchase this property, this is what we're going to get back out in a cash out refi. So this $115,360. When we get that cash out refinance, this $115,360, we are using that to pay off our policy loan to the insurance company. And when you do those payoffs, each time it's going to be $108,150 if we're holding that interest. So this is at a 5% interest rate is what you can get from this policy, and continue to earn compounding interest using their index loan feature. So in this scenario, we're simulating doing this twice. So just so that the ease of doing the illustration and making it work with this scenario, we could have actually gotten a higher loan in this year, but we're just simulating doing this where we are buying one property in year 4 for $103,000, and then another property in year 5 for $103,000, and paying off those loans within a year back to the insurance company. So ideally, you're doing it faster than that, so your holding costs will be less. You'll pay less interest in this, but we're simulating here the holding of the property for a year from the time you close on the property, do all of the work, have it rented out, and you do your cash out refinance so that you pay off the loans to the insurance company. So and that's what we're simulating here. And you know, if you're doing it within 6 months for each property, then this amount of interest would be accurate, because that would be a total of 1 year of interest. You might, and so with all that considered, you might be able to do more than this. You might be able to turn, so oftentimes depending on where you're getting your loan, a bank might want a 6-month seasoning period for a loan, but you know, many investor type loans, DSCR loans, there's things out there that you can, if you want to learn about other types of finance that are not what the normal mortgages are, drop a comment below. Maybe I'll do an extended video on some of these other methods of finance, where maybe you're not, like DSCR for an example, is not tying up your credit. Drop a comment below if you want to know more about that. And so in this scenario, you know, we walk through the numbers on these first 2 properties. Basically, they're exactly the same. So if you look at both Prop 1 and Prop 2, we're looking at 2 different pages here, and these are exactly the same. We're assuming a 6.5% interest rate, which hopefully interest rates improve, but that's what we're assuming for the life of this stuff. I made this spreadsheet so that it shows the amortization schedule for every one of these, and so you can, if you made it this far, then you will know that you just need to throw all of your money into Shiba Inu and drop a dog emoji in the comments. I'm just kidding on buying Shiba Inu. You can do that if you want, and who knows whether it's going to go to the moon, but I am not recommending it. Do drop an emoji in the comments though, and I will respond with something special. Check out the video description or top comment for a link to the series playlist. You can also find our playlist with content to help you on your path to financial freedom. This November will be the 10-year anniversary of leaving the Army infantry without a college degree and no real plans. I've learned a lot about how to earn, keep, grow, and protect more of my wealth. This channel is intended to share these lessons learned. And if you're interested in unconventional wealth growth strategies and how to multiply your income quickly, then hit that subscribe button to join me on this journey.